Sorry about that. We're just making sure that we could everything had worked okay. Right. I'm back on my currency on my dashboard, and in particular, I've highlighted the pound pairs. I just wanted to say the other way you use these indicators, those of you who have them, and if you haven't, you might consider them, and that is when we look at them, David in particular, he's much more indiscriminate than I am. He'll just look at them and think, oh yeah, I'll trade that. Yeah, that looks great. That looks, and he'll just, he doesn't really have a preference for any pairs, if you like. I do. I have a soft spot for certain pairs because I know they they can deliver some nice trades and some very high a good number of pips. One of them is the pound Aussie. I'm a great fan of the cross pairs. The Euro Aussie is one, the pound Aussie, one or two others, and this is another way. So you, as a trader, you can say, okay, this is 28 pairs. Oh, I'll just trade what's available. But when you start, that can be a little bit overwhelming and a little bit daunting, because you think, oh well, I'll go with it's like being in a sweetie shop. You don't know what you want, or because you think, well, I have a bit of this and I have a bit of that. No, just start with maybe more than one. Don't stick to one. Maybe you have at least three. Give yourself a choice of three, and make that choice dependent on the session that you're trading as well, because this is a global market, but it's also a local market in the sense that in this session, the London session, we are spoilt for choice, because most pairs of the 28, something will be moving somewhere. In Asia, you'll tend to find that it'll be the yen, it'll be obviously the commodity currencies. The cross pairs will move in that session, but it tends to be the local currencies there's more of a focus. And interestingly, when you come to the US session, it's not the same. Although you have US, Europe, and London, you will find that some of the Canadian pairs will perhaps move more strongly than they would have done in the London session. You've really got to kind of figure it out yourself. But if you're just starting, look at three, have perhaps a major, maybe a cross pair, and possibly even a yen pair. It's very much trial and error. All the pairs will have what we call in our program a different volatility coefficient, in the sense that they will move more in certain sessions. They will be, by definition, more volatile, which means volatility isn't always bad, it's good. It means they'll be, they can produce a bigger range on a daily basis, on an hourly basis. And if you look at the daily chart, sometimes the move in a pair, the majority of that move might have already happened. So you've got to be very aware of that this market is actually three very distinct individual sessions. Right, my pair is the pound Aussie, and it's interesting about the pound Aussie. We've seen this strong move buy in the pound Aussie, and we can see here on the array, we can see cable, yen, and David's been looking against the New Zealand. The pound Aussie kind of been at this kind of midpoint. This is the I actually like looking for pairs that are at this kind of midpoint, because David is very much, he likes it. His eyes always drawn to the extremes. I always tend to look, well, what's happening in the middle here? Are they at a pause? Are they perhaps going to? Is it going to break out? Which, how is that going to sweep upwards, or is that going to sweep downwards? Because I like to think, and I'd like to try and get at the beginning of a move from, if you like, a breakaway from the volume point of control, from an accumulation area, from a distribution area. That's just the way I like to look at my charts. And pound Aussie is one that I do. It's a pair that I look at quite often and I trade quite often. So to me, that looks very interesting. It's also interesting on the CSI, in the sense this is on the hourly chart, that I can see the Aussie is kind of turning down. They're kind of crossing as well. And as it's one of my pairs, I can then now go and explore it further. And I've actually got it on the on my NinjaTrader, and I've got the 3-minute chart. I've got the let's just move that. I've got the daily chart, I've got the 30, and I've actually got the 10-minute chart. And in fact, the 3-minute chart, as we can see here, is really reflecting what I could see on the on that array on the 15-minute. It's kind of been moving, as we can see here, it's kind of been moving sideways, but now looks as though it is going to break lower. We've got the volume point of control here. This is looking at volume, price, and time. But it's a congestion phase. That's what it is. It's a congestion phase, and this is what I like. This is my personal preference. This is what I like to see. A lot of traders don't like breakaways. They don't like congestion phases because you do. If you don't know what you're looking at and you don't have, you don't understand volume price analysis, they do produce fake outs. The price, because this is an area where this particular pair is in balance. There is no firm direction one way or another. And we can see this clearly. We've got the volume point of control here, and we can see it tried to break lower. Then we had this little hammer candle back to the volume point of control, back into balance, as it were. And then it tried to break higher. And again, you know, that you could say that was another fake, and back again it came, and then it came low. Then we had this candle here, a lot of volume going into that candle, which managed to push it up higher. That's actually the London Open, which is what you would expect. And you get an awful lot of fakery going on at the London Open, and you think, as a lot of traders at the London Open, they see something, oh great, that looks as though it's going up, up it goes, ton of volume underneath it. What happens the next candle? It's a nice big up candle, but look at the volume underneath it. It's half of what that candle is. And I appreciate there's always a volume surge at London, but this is very typical behavior around the London Open on all pairs, not just the pound Aussie. So that effort to rise, not enough volume underneath it, bang, down it goes. Nice big down candle. Oh, great, it's gone the other way. Oh, I'll go the other way. But again, look at the volume underneath it. For the size of that candle, you would expect that to be much, much higher. It just goes back into the, what I call, into the arms of the volume point of control, back into this balance. Another effort to rise, down again it goes. And this can be very frustrating because, you know, you can have, as I said, lots and lots of fake outs. Then again, we have effort to rise. We have a reasonable amount of volume, up, up, up. Then you have a narrowing of this candle with the same amount of volume. That kind of tells you that isn't going to go much higher. Then you have this candle here, the wick to the top. But again, it's always around the volume point of control. But this is reflecting what I have been seeing. I'll just bring it up again on here. If we look at the 15-minute array here, this is already telling me that that is the kind of price action that I can expect to see on the charts, certainly on the faster charts. There is no firm direction. That doesn't mean it won't arrive. It tells us we have to be patient. And this is where the indicators will come in, the VPA will come in, and now we're looking as though maybe we are going to break lower. Now, how do I use this? As the 3-minute chart. This is the 10-minute chart. The 10-minute chart is quite interesting. This was we had this big volatility candle shooting higher, and we had a typical reaction. We had the price action going back into the spread of the candle. Lots of wicks at the top and the bottom. So we know there's a lot of two-way price action, no firm direction. So that's what the 10-minute is telling us. Then I've got the 30-minute up here. And again, what is this? We're back at the more or less at the volume point of control here. An effort to rise at the London Open, straight back down again, and away we go. Now, what the volume point of control does, we look at support, and I'm going to do support and resistance in a little bit more detail in probably next week. We look at support and resistance. We've got price-based support and resistance. These are these lines here. This what we call the accumulation and distribution indicator. But we also have support and resistance through the prism of volume, and the volume point of control being the most important area of volume. Either support or resistance, and then these the histogram at the back here, we have these volume strips here, these volume, as you can see here, that's, look at that there, that also tells us that it's another area but it's not just price based, it is also volume based. But we'll talk about that later in another session, because I really want to look at this price action on the pound Aussie. Then I also look at the daily chart. Now, as I said last time, what the daily chart tells us is this pair in some kind of trend, or is it moving sideways? The nice thing about the pound Aussie is it is actually in a discernible trend lower. What that tells us on the faster time frames is that once the congestion phase is over, this pair is likely to move in, it's likely to give us a nice clean trend, because it's already in a discernible trend on a slower time frames. We covered this a little bit more, covered it in detail in last week's session, using multiple time frames, looking at the slower charts to tell us what the slower charts, the higher time frame charts, can tell us about the type of price action that we could possibly expect in the faster lower time frames. And we can see here there's quite a lot of weakness in this pair. We've had a break from the volume point of control. We've got two candles that are weak. Why were they weak? Because we've got wicks to the tops of the candles. Now we've had an effort to rise. It's trying to move higher, and this morning the pound is being bought and the Aussie is being sold, but it really hasn't done it with a great deal of conviction thus far. Now I'm down at the 3-minute chart, and I'm kind of seeing the attempt to a break lower, as we can see here. And how do I then know whether that is likely to deliver some kind of a trading opportunity and an opportunity to actually enter this move? I can see the break lower. It certainly looks more promising than all the others that have gone before. There's a decent amount of volume under that selling, which is great, but I still haven't, maybe haven't decided yet at what point do I think I want it. And I'm also now reaching a point of support from a volume perspective, but let's just see what else I can use to help me make my decision or not. One other thing about using congestion phases, and that is stop losses. I know a lot of people don't like them because you get a lot of fake outs, but the one advantage of using a breakout or looking at a chart that is in this, that has displaying this kind of price action, is you know exactly where your stop loss is going to be, and they can be much tighter. Yes, it will mean you will be stopped out a lot more, perhaps a lot more than you would normally be, but your losses will be that much smaller, because when it does break, it breaks and you get a really, really nice trend in either one way or another, one way or the other, right? And what I use, if I can find it, is a Renko chart. And I know you would have heard me speaking about this before. The Renko chart is a non-time based chart. Now this is the one that is on NinjaTrader. Let me just, and it uses what we call our Renko optimiser. And what it does, the optimiser tells you what the optimum brick size should be. Just open it, but it also gives us other information. I clicked on the 1-minute chart here. You can only do this with Ninja. You can't do it on MT4 or 5. And it tells me that the optimum brick size for this particular pair is 68. It's actually 6.8 pips. That is quite slow. It's reflecting the type of price action that I'm seeing, i.e. there's a lot of congestion. It's not moving very fast, or it's in a and if once it starts moving, it's going to take a bit of time to get going. Sometimes these move at 1 pip, 2 pips, but it's giving me a sense of what type of momentum is actually going on behind this particular pair. And I know the kind of momentum, because if I go back here, it's still here. I'm still waiting for this pair to move decisively. It's not. It's very sluggish. I don't mind that. I'm quite, surprisingly, I am actually quite patient. I know it doesn't, but David is quite surprised that I can be patient in some things and very impulsive and impatient in other situations. So what the indicators are telling me is the kind of price action I'm looking at. Am I in congestion? Am I looking for a potential reversal? But not only that, what kind of momentum is behind this move? If there is any momentum, what kind of risk if I take this trade? Because if it's moving very slowly, I could be taking more risk, because it's not in this, but in these time frames you want things to move fast, because you want to be in and you want to be out as quickly as possible. But low volatility can, it can be good or it can be bad. It really depends on your personality. I don't mind sitting in trades that take a long time to develop. I don't get nervous. I don't, my neuroticism, I score very low for neuroticism. And those of you who are on the program, I hope you have done the psychology module first and taken the test, so that you know your own characteristics, your own personality traits. Having a low score for neuroticism doesn't mean I'm neurotic. Is good and bad. It means that I don't overreact. It doesn't worry me if things going against me. I say, yeah, fine, that's cool, I'm about that. But it can have its downsides, and sometimes I can take on more risk than, other person would say, look, did you not see that coming? So it's very much a personality thing. You take the test and establish what kind of where you sit on the neuroticism score. You're not neurotic. It is just what is your emotional reaction to, to having money at risk in the market. Right, so I've got, this is moving at 6.8 Renko, so it's not moving very, very fast. But what it is encouraging is that it is actually moving in the direction that the 3-minute chart is telling me, and that is that it is breaking away from the volume point of control. I have actually got a potential entry, in the sense that what I like to see is a change of trend dot to bright red. The trend monitor is now bright red. I also have on this indicator, I have the accumulation and distribution, but let me just take it off, because it's a little bit, it's got too many lines on. Let me just take that off very quickly. So accumulation and distribution, there we are. Just let me remove that. There we are. Because I've also got the camarilla on here, camarilla indicator, which is absolutely brilliant. That is, we've developed this indicator, another way of looking at support and resistance, but also more importantly, as a kind of price objective for what is going on at the moment. Two things. At the moment, this is trading between the R1 and S1, perfectly reflecting what I'm seeing on the time chart, what I'm seeing on the array. It is in what we call the buffer zone. It's in congestion. It's in congestion, but it's now kind of moving lower. Where's it going? Well, the indicator's telling me it's heading for the S1. This is the first, our indicator has 6 levels, unlike most camarilla calculations, which are based on 4. It's not moving very fast, but I'm cool about that. But I know where my first price objective is going to be. As we can see here, there's a lot of support going right across at the S1. If it gets through the S1, and I've got volume, which I will see on my time chart, where's it going next? Well, it's going down to the S2. Where's it going next? It's going down to the S3. And all things being equal, we never know what's going to happen in the market. At least I have some idea of where I am going. And in terms of where my stop loss is going to be, well, you can even use it for stop loss as well. You can put it behind the R1, or if you want to be a little bit more conservative, you can put it behind the R2. And in fact, that is also reflected on here. So we know that at the volume point of control, you would put your stop loss just above the volume, as I said, the volume point of control, and that would be quite tight. So you are, if you like, your loss would be not as great as if, as David said, with a reversal, you have to allow the move to breathe. With a breakaway, it can be much more compact, because the price action is much more compact. Right, so I'm just going to leave that there. What is that telling me? It's probably going to stop here as well, because I've got the VPOC coming on 10-minute chart, and it's got to get through there. It's not a fast and furious move. You know, this trading is not always being about fast and furious, being on the really fast time frames. You can get really nice steady trades on price action that you can see in moving out of congestion. It may suddenly pick up, it may accelerate once it moves away from these congestion phases. The great thing is often you will get an acceleration, and you will see that acceleration in the in something like the array. So when what I want to see that getting down to that mean, that line, that center line there. Once it starts sweeping down, then hopefully I will then, well, not hopefully, I know I will get a really nice move to the downside. But it started, you know, the ripple starts from congestion, as we say in the books and we say on the program. Trends, this is the congestion phases are the spawning ground of trends. You've just got to be a little bit patient. As I said, you know, sit through this, you know, the moves that you think, oh my goodness, they're going to, you know, they're going to go against me. Know where the price action is heading to by using support and resistance, either a camarilla or whatever support and resistance. I mean, even Fibonacci is a form of support and resistance, if that's what you'd like. Moving averages, you can use the support and resistance. How many times have you read, oh, the price got to the 200 MA? You know, it either stops the price and think, oh, that's a form of support and resistance. So just putting all these things together, you know, and all things being equal, I think this will turn out to be a very nice trade. What do you think, David?
I think so, too.
Anything you want to say to that? And
you need to flip back over to me. Sorry.
Yeah, sorry, and I think I need to go back over to David because he's got, and you'll wrap up. And as I said, so if you're not on the, if you're not looking at the pound Aussie, I'm not suggesting you go and do. Please, whatever we say here, these are not trading recommendations. You have to work this stuff out for yourself. But in terms of looking at price action, or come on the program, or join our program, absolutely. You know, just understand price action, and you know, just look at it. Look at something like this as not moving too fast. Take on board what we've said in terms of support and resistance, you know, momentum, trends, how they're born, congestion, etc., and just look at things in multiple time frames, and you know, just absorb it. Price action is fascinating, and seeing actually develop a narrative, and seeing that narrative play out is very, very satisfying, and very satisfying actually making money from it. So I'll pass over to David.